Right. I see most people have joined. Why don't we just go ahead and get started? Welcome to all of you. Thank you for joining today. This is the Alliance's unveiling or revealing our annual big PRIP study, Protected Retirement Income and Planning Study. I'm Cyrus Bomji. I'm with the Alliance. I run communications for the Alliance. Thanks to all of you for joining. This is, as I said, the Alliance's big annual study, and it's the only one of its kind out there that surveys both consumers and advisors at the same time, simultaneously. And because of that, we're able to provide a more comprehensive and integrated look at changes in the retirement planning landscape, shifts in advisor and consumer attitudes and behaviors towards retirement savings, and then, very importantly, gaps between consumers or clients in this case and advisors themselves in terms of how they're thinking and where they're headed with their retirement savings and portfolios. It's a large survey that we do every year, about 2,500 consumers, ages 45 to 75, which are the ones that are actually seriously planning and looking at their retirement portfolios and where they're headed. This year, we did an oversample of what we call peak 65 consumers between the ages of 61 and 65. Peak 65, for those of you who don't know, it's a term we've coined where next year, 2024, we'll have the largest number of Americans turning 65, the traditional retirement age of 65, than at any time in history. After that, in 2025 and beyond, those numbers start to go down. This year, we also looked specifically at investors. Those are those with an advisor and that have a minimum of 150,000 in assets. And so there are two headlines for me, at least, in this year's research. And Anne and Julie are going to give you some more detail over here in a minute. The two headlines for me are one good, one bad. The bad is that most Americans, especially those that are close to retirement or retired, still won't have the savings to last their lifetime, or they're not going to be able to maintain the lifestyle they want in retirement. But there is good news. The good news is that more Americans are protecting their retirement and adding protected income from annuities into their retirement plans, and this is in 2022. Also good news is that both advisors and consumers are changing their approach to planning. They're looking at income versus just savings, and both are now looking to things like alternative investments and protection, most importantly, to build what we call a modern portfolio today. In fact, 97%, pretty overwhelming, of consumers say they have that having protected lifetime in addition to Social Security to complement Social Security in retirement is valuable. That's a pretty staggering number. And finally, those clients who added annuities to their portfolio in 2022 are overwhelmingly satisfied with their investment choices. And those are some of the top headlines. I'm going to turn it over to Anne to give you a full deep dive into some of the other findings over here. Anne?
Thank you, Cyrus. Yes, we're excited about sharing this information with you today. My colleague Julie is on as well, and she might pop in, say a thing or two. As Cyrus just mentioned to you, that this study is really unique because we do look at both consumers and financial professionals at the same time and look at the differences between them, and between their perceptions of retirement savings and really more importantly, the focus on retirement income. Cyrus did mention the fact that we did a study with 2,500 consumers and over 500 financial professionals. We're putting this information out today and has come out this week, but more is on the way. We're going to share what we think are some of the highlights with you today, but know that there's a lot of information deep behind this. Cyrus mentioned a couple of things that I just kind of want to reiterate. We've been doing this study for 5 years, and a couple of the things that we've seen is that this notion that investors have hurdles to overcome to make sure that they achieve a financially secure retirement. And we've seen that the events of the past few years have made them feel even more vulnerable. We'll get into the numbers, but we're seeing a shift here that they're feeling even more stressed about this notion of having a retirement income that lasts their life. And as Cyrus mentioned, financial professionals really are the ones to help us figure out how to do this, how to convert our income into our assets into income. And we've learned that really due to a lot of changes in the past few years as well, financial professionals are turning more often to annuities as a solution. So we'll get into that as well. There we go. Generally, we're going to talk about four main things. Americans are at risk of running out of money in retirement. That's nothing new, but we're going to put some numbers to it. I think most of you have heard that before. Cyrus mentioned this notion of Peak 65 being here, and the fact that Peak 65 is here makes this idea of preparing for retirement income even that much more important. As we are dealing with a lot of economic and other changes, that it just brings this whole level of importance up. Americans have uncertainties about Social Security and Medicare, but they are going to rely on them for the retirement income. And there's been a little shift with both advisors and consumers in terms of those traditional formulas of the 4% rule and the 60-40 rule. So we're going to talk about that. This first notion is Americans are at risk of running out of money in retirement. And this is a question we've been asking for a while, asking about, do you feel your retirement savings and sources of income will last for the rest of your life? When we asked consumers this question, 51% said no. So less than half say yes. My retirement savings will last my lifetime, and I'm feeling pretty good about that. So that's a pretty stark realization that we've got half of the people in our country who are not feeling comfortable that they're going to be able to have money to rely on in their retirement years. We also asked another question about confidence that they're going to have income to cover their basic monthly expenses. So this is, your mortgage, your groceries, your utilities, your basic monthly expenses. And we say we have about 7 out of 10, 68% who say, I'm at least moderately confident, but we have a third of people who say, I'm not feeling very confident about that, about being able to cover my basic monthly expenses. And a notion, again, that Cyrus brought up earlier is these people close to retirement. These are people ages 45 to 75. So they're either in it or they're getting close to retirement. And so they're sharing their concerns with us that even those basics are something that a third are worried about being able to cover. There's a lot going on in this slide, and let me just mention a couple of things. We asked people who have retired why they retired when they did. So this is among consumers in that age span who have retired. Why did you retire when you did? At the very bottom, we see 53%. We throw this into one category and we see half of them said, I retired due to circumstances beyond my control. Health, I lost my job. I was forced to quit due to COVID-19 or something like that. And then about almost half, 45% said, well, I began claiming Social Security, or I reached a specific age so that I could claim my pension. So those are the kind of the main bulk of reasons why people who retired did retire when they did. But let's go on and look at consumers who are not yet retired and see when they do plan to retire. So years ago, Social Security was developed, and the whole idea of retiring at 65 kind of hit our national consciousness, and that's still there. The average or the median age, both, that people plan to retire is still the age of 65. And we asked people who want to retire why they want to retire at that point. 48% say, I'm going to begin claiming Social Security benefits. So I'm going to rely on it. I'm going to begin claiming it. And another big proportion, 38%, say, well, I'm going to be eligible for my pension at that point. And then a handful down at the bottom. So 25% say, what, I anticipate that I'm going to need to for health reasons, or I'm going to have to retire because of I reach a specific age. And so all of this to say that about a third of those who are not yet retired recognize a moderate or high risk of needing to retire early, only 31%. But going back to what we just saw earlier, a big proportion of those who are currently retired for reasons out of their control. So I guess this point is that people know that they're going to need to retire, and they think they're going to retire at a certain age, but they need to be a little bit more cognizant of the idea of retiring for reasons beyond their control. So that speaks to the notion of being prepared and being protected and being ready to be able to have some retirement income and be able to draw down. I'm going to move into this notion of Peak 65 that Cyrus talked about earlier. It's here. It's heightened the stakes of getting retirement right. And so when we talk about Peak 65, what is it? Now, today, in 2023, about 10,000 people turn 65 every day, but that number next year is going to peak at 12,000 people turning 65 every day. So we decided to take a deeper look and see what is going on. Are people prepared for this group of people retiring? How are financial professionals thinking about it? Again, a lot going on in this chart, but I'm just going to explain it to you briefly. One of the things that the Alliance for Lifetime Income has focused on is this notion of people who can be protected when they're retired, that their income is protected. And we believe there are two ways that one's income can be protected: through a pension or through an annuity. Actually, three. Also Social Security. Cyrus always reminds me that's the third one. The third leg of the stool is Social Security. What we've done is we've looked at people who, the percent of our audience between the ages of 45 and 75 who are protected, who have either an annuity or a pension. And we see here in 2023, that number is 43%. So 57% are not protected by one of those two things, and they're going to rely on Social Security as their form of protected income. That number, that 43%, has dropped since we've been conducting the study for the past several years. And one of the main reasons for that drop is pensions. Now, 38%, which still feels like a high number, 38% of those 45 to 75 have a pension, but that pension number has dropped, and it's beginning to drop precipitously now. So this current Peak 65 group, those people that are between the ages of 61 and 65, are the first group that we've seen with less than half who are protected with a pension or an annuity. So we're going to begin to see this significant drop in those who are protected, particularly by a pension. So what do we need to do about that? Here's a just kind of an idea of who those Peak 65 consumers are. Again, those who are between the ages of 61 and 65. Half of those in that Peak 65 age group have less than $100,000 in savings or investments. So again, Social Security becomes very important to them, or a pension becomes very important to them, because they don't have a significant amount of assets to be able to rely on for retirement income. Let's look at these financial professionals that we talked about. So we talked with over 500 financial professionals, and we've been talking with them for the last several years about how they think about retirement income. And one of the things we did was we asked them specifically about Peak 65. We mentioned the idea of Peak 65, and we defined it. And we said, what have you seen in terms of changes to your business? And here we see nearly all, only 3% said, I haven't seen any changes that I would, relate to Peak 65. So 97% said, I see one of these things. And in fact, 8 out of 10 said it's something along these lines. The topic of retirement income has increased in conversations with my clients. They're asking questions about healthcare, Medicare, long-term care. They're asking about Social Security. Or there's a whole slew of them who say, I just need more advice. My clients are consolidating accounts, or they're talking about how to handle rollovers or things of that nature. So those financial professionals are really seeing a change in terms of their own practice. Okay. Next, we get into the notion of Social Security and Medicare. And people's questions. Of course, there are a lot of questions about Social Security and Medicare and what's going to be available. And I guess we've probably seen this in other studies, but let's look at this top left box first. And this question was, how confident are you that Social Security will be solvent and able to provide retirement benefits for you? And we see here that 15%, that's this number here, 15% say, I'm very confident. 39% say I'm moderately confident. And then the rest, about little under half, say, you know what, I'm not very confident it's going to be there. Julie and I have done studies like this for with other age groups, and we can tell you that confidence drops off significantly for those who are younger than age 45, for sure. They say, you know what, Social Security is, I'm not really satisfied it's going to be there for me. Similar, we see the same thing about Medicare. We only have a small proportion who are feeling really confident that Medicare is going to be solvent and be able to provide for them. And finally, just one of the ways to just kind of think about this on the bottom right, we've asked them, will or is Social Security an important part of your retirement income? 40% say it's critical to my retirement income. 33% say it's going to be a modest part of my retirement income. So big proportions are worried that it's not going to be there, but also big proportions are saying it's really important to me. Okay. Julie, jump in if I've missed anything here. Okay.
That was good.
Okay. So we also asked, when we think about accumulating our retirement savings, again, over the past several years, we've talked with consumers and investors, and people are feeling, of course, not totally confident about that accumulation phase, but they are feeling better about it than they have before. Especially those who rely on a financial professional. But things have really changed in the past couple of years due to kind of market adjustments. So one of the things that we wanted to ask about was this notion of the 60-40 allocation rule. We asked consumers, is the 60-40 allocation rule, is it outdated, or does it remain a viable approach? The point here is that half of consumers say, you know what, I don't really know. I don't really understand the 60-40 allocation rule. And 22% say, I think it remains a viable approach, but 28% of consumers say it's outdated. But if we ask financial professionals the same question, of course, most of them have an opinion on this. Only 2% say they don't know. But here we see that 55% of financial advisors say it remains a viable approach. It's a foundation that's still there and it remains a viable approach. But 43% say otherwise. 43% say other asset classes should be implemented as building blocks. So we believe, really, because of what we saw, particularly last year with the bond market, there was kind of an upending or a little bit of a shift in terms of how people think about this. We think if we had asked this a couple of years ago, we wouldn't have received this strong of a response from financial professionals. So we dove into it a little bit deeper, and we asked all of them, regardless of whether they said it's still a viable approach or not. We said, what would you add to the 60-40 model if something were to be added to it? Over half said annuities. 48% said real estate, others said cash equivalents, but they're giving the nod to annuities a little bit more. And we'll see that this is a consistent finding in terms of them thinking about annuities more perhaps than they have even in the past couple of years. Another model, the 4% rule, very similar findings here. Half of our respondents say this is again, financial professionals. Half say the 4% rule is not valid due to changes such as the inflation, longevity, volatility. I'm really not going to rely on it, is what they're saying. Another half say, you know what, that 4% spending guideline is based on analysis of US historical data. It's still a viable approach. So again, bit of a debate there. And I think these are healthy debates for us to be thinking about and for financial professionals to be thinking about as they come up with retirement income solutions. Now let's go back and think about consumers again. Now, how have they reacted to some changes in the market? We asked them, okay, due to the 2022 market setback, how are you thinking about the market? Here we see that a little bit over half, 57% say that they're confident that the market will bounce back over the next year or two. 43% say the nature of the market setback represents a longer term change that alters my retirement situation. So they're beginning to kind of look out there and say, I need to change the way I think about my retirement income. Okay. If you've been looking at surveys about retirement and saving and retirement income, or basically the economy overall, you're seeing surveys say, I'm really worried about inflation. And this survey is no different. We asked people, both financial professionals and investors, are you worried about inflation, the stock market trends, et cetera? One point I want to make a difference. I want to make a point here about investors. Throughout this survey, I've been talking about consumers. We're able to divide the survey in many different ways. In some cases, we've actually looked at just a subset of those consumers, and these are investors. We call investors those who have 150,000 or more in investable assets, and they work with a financial professional. So when we compare the results with our financial professionals, typically we look at it through the lens of the through the lens of the investor as opposed to the consumer. So we can kind of look at apples to apples. What does the financial professional think? What does the investor think? So going back to this notion of inflation, we asked, how worried are you about inflation, increasing inflation, reducing spending power in retirement? Almost 9 out of 10 financial professionals said, I'm worried. I'm worried about this for my clients. 79% of investors are worried. So we see a flip. We see that financial advisors are more worried than their investors are about the notion of inflation. They're also worried about the stock and bond market trends and recession and increasing inflation, reducing ability to contribute to retirement savings, et cetera. So there's a lot of concern in the market about what's going on. So we asked financial professionals, okay, we know you've been through a lot in the past couple of years. Have you changed your retirement planning approach in the past year? And if you have, why? We have 82% who say, you know what? Yes, I've changed. 44% say, I've changed just a little bit, only somewhat. 31% said moderately, 7% said, I've changed a great deal. And then we've asked them why. 73% say inflation concerns. That's the biggest driver. Of course, interest rates is up there as well, as is market volatility. So I guess what the trend is that we're seeing is that they're no longer saying, okay, I'm going to stick to the 4% rule. I'm going to stick to the 60-40 rule, or I'm just going to kind of keep on going the way I've been going. Financial professionals are looking for different ways of managing their business and basically securing retirement income for their clients. We asked them, what are they doing? So among those 80% who had changed, we said, what are you doing in terms of your retirement planning approach? 42% said they're putting more into annuities. 40% said they're putting more into treasuries. 37% shortening bond maturities. And then we've on down the list, less into stocks, more into stocks, commodities, that sort of thing. So again, we're seeing a real change in the way they're approaching their allocations for their clients. This is among investors. So again, remember, investors versus consumers. Investors have 150,000 or more in investable assets, and they work with a financial professional. We asked them in 2022, did you make investment changes? 55% said that they did, and there are a whole host of things they could have done. Almost 4 out of 10 shifted their portfolio to more conservative investors. Some sold investments to avoid losses, or they protected, 10% said they protected their annuity with or their portfolio with an annuity. And then we asked them about the type of change. So interestingly, we asked those, we actually did an analysis here. And among those who said that they protected their portfolio with an annuity, 100% are satisfied with the investment changes that they made in 2022. So they very deliberately decided that they needed protection. They chose an annuity and they were happy with that change. They could have done other things too. They could have made other changes to their portfolio, but those who purchased an annuity are feeling pretty good about that decision. I'm going back to consumers here now. So again, consumers are ages 45 to 75, and they don't have any floor of investable assets, okay? We've known this for a long time. Annuities are a bit of a complicated product, and so we wanted to dive into and understand how people think about annuities. Only 20% of consumers say that they're extremely familiar with annuities. Most say, you know, I'm somewhat familiar, but we have about a quarter who say, you know, I really don't know much at all about annuities. The notion of the Secure Act, we asked people because now, because of the Secure Act, people, consumers, would have the potential of having an annuity in their employer-sponsored retirement plan. So we asked consumers overall, are you aware that the Secure Act allows employers to offer protected retirement income, basically in the form of annuities? Only 1 out of 5, only 21% said, yes, I'm aware of that fact. Then we said, do you think employers should offer a protected retirement income plan or annuities in a retirement income plan in your 401k plan, that kind of thing? 77% said, yes, we think they should be available to us. Then we said specifically, are you interested in investing in annuities as part of your plan offered by your employer? And this was just among those who do have a 401k. And we see that 40% say they're extremely interested, 42% say that they're somewhat interested. So basically the takeaway here is many people are simply not aware that this is available, potentially available to them in their retirement plans through their employer. And they're demonstrating strong interest in it simply being there, and perhaps even in investing in it within their employer plan. Okay. Here's another idea regarding the notion of guaranteed lifetime income products. So one obvious and powerful benefit of annuities is being able to offer guaranteed lifetime income. And we asked respondents, we asked consumers, do you agree with or disagree with this statement? Financial professionals have a responsibility to present financial products that provide guaranteed lifetime income. And almost half, 46% say, I agree with that. And we asked those who have a financial professional, if that professional did not present all of the possible strategies for producing income, would you consider leaving them? And about half said yes. So essentially they're saying, you know what, to those who have an advisor, they're saying, you know what, give me the options, tell me what's available to me, so I can make some educated decisions along with the advice that you give me and the guidance that you give me. We found this really interesting. So again, we asked investors and we asked financial professionals similar questions to see if any gaps existed. And in this case, we asked financial professionals, do you raise the topic of protection with your clients? 73%, so three-quarters said, yeah, I do. I raise the topic of protection. I'm the one who brings it up. We asked investors who work with an advisor, who brings up the topic of protection? And only 33% of investors say that their financial professional brings it up. I don't doubt that the financial professional brings this up. I think they do. But I think the idea of protection has many forms. And I think the way one talks about it and the frequency with which advisors talk about it is important here. Because often we have to, as consumers, when we hear about lots of different things and we're not a financial advisor, we might need to hear it over and over again. And I think that's part of what the gap is here, that investors might need to hear it a little bit more frequently. What are you doing when we talk about protecting my retirement income? What does that mean and how are you going to do it? I think that has a big part of the big reason for the gap. This has been a very consistent finding, but I think it's important that we bring it up again. So we asked on the left-hand side is the financial professional group. We said, what is your average client's interest in purchasing an annuity that provides guaranteed lifetime income? And this number is, I think it's almost 20% who say that my clients would be very interested in that. And then we asked investors, are you interested in owning an annuity that guarantees you regular income for the rest of your life? So the number down here at the bottom in terms of extremely interested is about the same for both of these. But consumers, there's a big group of consumers, almost half, who say, you know what, I'm somewhat interested. Actually, this is the percent who already own. That's the 15%. This is the 48% who say I'm extremely interested. So big gap. Consumers are much more likely to say, you know what, I am interested in that notion of guaranteed lifetime income, more so than what financial professionals are aware of. We asked investors straight out too. So again, these are those investors, those who have 150,000 or more in investable assets. What is your interest in purchasing an annuity as part of a retirement income plan? We see 27% say I'm extremely interested, 37% say I'm somewhat interested. The big difference that we're seeing here, and we've seen this consistently the last couple of years, is that those who are younger are much more interested than those who are older. We think there are a couple of reasons for that. Probably the biggest one is that those who are older are much more likely to have a pension. So they're much more likely to have a protected source of income than those who are younger. Just another note about those who are protected. So again, the definition of protected are those who have a source of protected income in the form of an annuity annuity or a pension. Those who are not protected do not have an annuity, nor do they have a pension. Those who are protected just feel better about their retirement prospects. They're more optimistic about financial preparation. They're much more likely to believe their savings will last. They're confident that they have those basic monthly expenses covered, and they just feel more positively about their retirement outlook. Just generally. I have more slides to describe kind of who we have in the survey and more details there, but we don't want to get into that because it's just a lot of details. I guess the main point I wanted to end here on this one is that the notion of having an annuity or a pension, just the idea of having a form of protected income, really does change the way people think about their prospects. This is such an important time of one's life. And, regardless of whether one has money or not, we have found very consistently in our surveys that people look so forward to the notion of retirement. And if they can look forward to retirement with confidence, it just makes a world of difference. So those are all the slides I have today. Cyrus, how would you like to go forward with this? Did you want to add anything?
Any questions? I think I don't see any here. Sophia, tell me in the chat. But if you do have any questions, follow up with me, follow up with any of our Alliance staff on this. We've just started rolling this out to media just in the past couple of days. And I hope, by the way, all of you received the full decks. There are 2 decks that have all this detail plus more. One that's focused on consumers and one that's focused on advisors. So if you haven't received it, let Sophia or any of us know. We'd be happy to send it to you again. And that's basically it. So thanks for joining.
Okay, thanks everybody for your time. Take care.
Thanks, everyone.
Bye.